Welcome learners. I am Dr. Vikas Agrawal from Amrapali University, Haldwani. The today's topic is functions of depositories in security market. Welcome to all of you. The learning objectives of this session is to understand the concept and need for a depository system. Learn about its features, functions, and legal framework. To get familiar with key depositories in India, CDSL and NSDL, and to examine the growth, trends, and future scope of depository system in India. In the last lecture, we have discussed the functioning, types, benefits, regulations, and taxation aspect of mutual funds and exchange traded funds based on regulators' guidelines. So, let's begin by exploring depository in India, functions, starting with the concept of depository. Capital markets have evolved from physical to electronic systems. Depository system is a system wherein the securities of investors are held in the electronic form with the depository at the request of the investors, and transfer of securities takes place by means of book entries on the ledger of the depository. In other words, depository system helps to eliminate risk and delays in handling paper securities and make investing and trading safer, faster, and more efficient. This system is also referred as scriptless trading system, as the system dispenses with the securities and its movement in the physical form. So basically, depository system is a simple system where the securities of investors are held in the electronic form. Concept of depository. Depository is an institution that holds financial securities in electronic form and facilitates their transfer. A depository can be compared as a bank. A depository holds securities, our shares, debentures, bonds, government securities, units, etc. in electronic form. Besides holding securities, a depository also provides services related to transactions in securities. As per the Depositories Act 1996, depository is an entity where securities are dematerialized. Transactions are processed electronically. Dematerialized means shares are in electronic forms. Features of depository. Number one is dematerialization, conversion of physical certificates into electronic form. Fungibility. Securities are identical and interchangeable. No stamp duty. On electronic transfers, there is no stamp duty. Safe and secure. Depository system eliminates theft, bad delivery, losses, transport losses, etc. In depositories, there are so many parties involved. Depository, DPs means depository participants, issuers, and beneficial owner means investor. Functions of depository. Number one, dematerialization converts physical shares to electronic. Rematerialization. Sometime investor wants to get back the security in physical form. This process is called rematerialization. The depository helps to convert demat security back into physical form. Settlement of trades ensures a smooth transfer post trade T plus 1 basis. T plus 1 basis means transaction day plus 1 day more. Transfer and transmission. As per instruction by investor, the transfer and transmission process is being completed as per instruction slips or legal orders. Corporate action support. Depositories also help dividends, bonus issue, right issue, etc. Pledge and hypothecation. Depository also help to get the security for collateral for the purpose of pledge and hypothecation. KYC compliances. Depository helps to track the detail of investor for proper KYC compliance. Investor education and protection. From various modes, depository updates for investors, alert and complaint resolution, grievances redressal system, etc. Next is role and importance of depository. Simplifies stock market operations. Immediate transfer of security. Promotes transparency and accuracy. Support the growth of capital market. Reduces transaction costs and errors. Reduction in paperwork involved in transfer of securities, and as well as help in nomination facility. These are the role and importance of depository. Depository also provide convenient method of consolidation of folios. Suppose an investors have so many mutual funds, so many shares in the account. Depository provide a combine or consolidate account statement of all these securities. Holding investment in equity, debt instrument and government securities in a single account. Change in address recorded with DP gets registered electronically with all companies in single effect. With the help of depository, a change in address or any correction in profile in a single point which convert all securities invested. Depository eliminates handling of huge volume of paperwork. Depository system facilitates a faster disbursement of security holding benefits like right shares, bonus shares, etc. The Depository Act 1996. The Depository Act 1996, which came into force from 20th September 1995. It provides a legal framework for establishment of depositories to facilitate holding of securities, including shares in the demat form, and to effect transfer of shares through book entry in accounts maintained by the depository. This act is the legal foundation for electronic securities. It includes agreement with participants, dematerialization and ownership rights, registration and fungibility. It empowered SEBI to regulate depositories and depository participants. In India, there are two main depositories named NSDL and CDSL are institutions that hold and manage investor securities in electronic form, replacing physical share certificates. These depositories enhance safety, speed, and efficiency in the capital markets by facilitating services like dematerialization, trade settlement, corporate actions, and investor services through depository participants (DP). Depositories are regulated by SEBI under the Depositories Act 1996. These entities play a crucial role in modernizing and securing securities transactions. So, this is the concept of depository system and role of depository in Indian capital market. In next lecture, we will discuss in detail on two major depositories, CDSL and NSDL. Thank you.